So how's the market doing in the greater Boston area? I'm Jeremy Searier with Mansard, and today I'm going to bring you some market data on the first quarter of 2025, as well as an outlook for the rest of the year and a look back to see where we've been. So we're going to be pulling data today from three counties, north and west of Boston: Rockingham, Essex, and Middlesex counties. These counties all have retail, office, industrial, and flex deals that sold between $1 million and $100 million. So looking back to 2006, we can see here that we are basically on trend. If we annualize our year-to-date sales out, we're on trend. We're on par with our 2006 data, and then looking at about 2015 as well as 2023. 2024 ended with a bit of a pop in the fourth quarter. And the first quarter here in 2025 has outpaced year-to-date the first quarter of 2024 by 3 additional sales. So there's been a slight upward tick in activity. You can see here we're up about 12% year over year in terms of sales volume by buildings traded, okay? So what this basically means is that we're more or less flat in the market in terms of velocity. We're at our long-term average, but we are a little bit more active this first quarter than we were this first quarter of last year. So looking at the 10-year Treasury, we were all hoping back in the fourth quarter of 2024, as the Federal Reserve began cutting rates, that we would start to see the 10-year Treasury come down, which it did, got down to about 3.6%. And then concerns over the debt spending with the U.S. government, inflation, and the economic outlook for growth all kind of popped that 10-year Treasury back up. So right now we're hanging around a 4.5% rate. So you can see here the trend overall on the 10-year Treasury. We are up a bit, but it looks like we're kind of holding on here, and we'll see as these long-term yields start to reconcile the outlook for the economy, what that's going to look like. So far, we're starting to hear some concerns in the markets about a possible recession triggered by the tariffs by the Trump administration. So if that does happen, I would expect to see rates come down some later on this year. So overall, from a lending perspective, how is this looking for our market? Well, interest rate trends, we just kind of talked about that. These rates are relatively elevated historically, we compare them to historic averages. So we're expecting them to remain that way for most of 2020. Currently, we're seeing multifamily loans in about the 5.3% range, and then SBA and single-use loans at about 7.5%. Tracking the Federal Home Loan Bank of Boston, those rates tend to trend pretty closely to the 10-year Treasury rates, and we're seeing marking those up about 250 basis points. We're seeing debt pricing around that 7% mark. So as borrowers are active in the market, we do have maturities hitting this market in 2025. Lenders are still acting conservatively, so not a lot's changed from last year. I would just say that I expect this year to continue sort of to be an average rate of change as compared to last year. And what I mean by that is I'm not expecting any dramatic increases or decreases in volume, rather more of a continuation of what we saw last year in the market. So comparatively to the long-term average, if we look at the 459 deals that traded over the last, almost 20 years, we've got year-to-date 113 transactions. So we're trending right now, if we annualize out at this rate, to be at about 463 transactions. So we're going to fall kind of right on the average line. One thing that is interesting to note is the long-term average for median deal size. We had a $2.1 million median deal size actually last year, and so far this year we're at $2.5 million for median deal size. And basically what this tells us is a lot of the volume that's happening in the market is on the lower end of the market, lower price deals. We're not seeing a lot of high price deals trading, so that's certainly bringing that median deal size down considerably in the market. And then overall for volume, we're at $416 million in dollar volume year to date. Historically, a full year on average is about $2.8 billion volume. Now pricing. So price trends on an average price per square foot, there is very interesting. There's sort of a convergence happening right now in 2025. We can see Retail market here in orange is definitely having some price adjustments on an average price per square foot basis. And I think that's purely a reflection of the cost of capital in the market and interest rates, where we're seeing retail rates start to trend to I would say a repricing average that lines up more with cost of debt. And then flex and industrial, flex kind of went through a big correction with the biotech market kind of bursting and then drying out, and it's now recovering. So we're starting to see some upward movement on the flex market. The industrial market as well went through a little bit of a average price per square foot change, and that was tied more to larger, higher quality industrial deals not trading in 2023 and 2024. We're starting to see that market reactivate now, and that average price per square foot is starting to come back up. And then office, surprisingly, in the first quarter of 2025 has bounced on an average price per square foot basis, where we're seeing some trades in the market that are bringing the office figures up in price. So from a national perspective, how do we look compared to the rest of the country? I like to look at the Green Street Commercial Property Price Index, and you'll see here that it's basically saying the same thing that we're seeing locally, and that is that in the trailing 3 months, there's been a 0% price growth in the market. The trailing 12 months had a 5% positive change in pricing. But really what we're seeing here, I think, is a sideways market. And you can see here on the chart where the index is at 127.3, market is stabilizing. On the composite index, this is the Commercial Real Estate Performance Index by CCIM Technologies. You'll see here that the trend is starting to bounce back up again, and this is largely a sentiment index for how investors are looking at the market. It got pretty low there back in 22, 23, and it's now starting to bounce back up again. So we're starting to see some overall improvement in sentiment. So the retail market, volume-wise, going back to 2006. We can see here we're on trend right now to hit about 189 transactions this year, which is still a very healthy volume in the market. Despite the pricing softening somewhat on average price per square foot basis, we are seeing retail demand continue to be strong, and the forecast through the fourth quarter 2025 shows retail demand for the Boston market still being strong. So Dr. Glenn Mueller's got the retail market here in the Boston MSA at the 11 stage on his retail market cycle forecast. So that's a peak phase in the market where we have an equilibrium of low vacancy, rent growth, and high demand for retail properties. Moving into the industrial market, our industrial market here showing some signs of deceleration in volume. Year to date, we've had 19 transactions. If we annualize that figure out, we're looking at a year at about 78 transactions, which is actually would be the slowest year since 2014. So that it's possible that number may start to come back up. It still remains a very popular asset class. A lot of demand here in the investment market, so we can see the average price per square foot coming up. So I think investor capital, we're starting to see it re-enter the market, looking for industrial deals. Not a lot of deals to look at in the market. So holding those assets, we expect to see more demand there. I think the rent growth has tapered off here, and we're kind of leveled off on rents, but capital demand still remains strong for this product type, particularly in the Boston area. Sub 100,000 square foot industrial, not a lot of it was developed in the last 5 or 6 years. Some of the larger box industrial is sitting vacant right now, but anything under 100,000 square feet that's in the Boston area that subdivides well is still being sought after. Dr. Glenn Mueller's got us into the hypersupply phase for the Boston industrial market, and I really think that ties to some of the spec development that happened where the absorption didn't occur, where we've got large warehouses and distribution centers in the Boston area that are sitting vacant right now. But anything from 5,000 up to about 80,000 square feet that we see still highly sought after, a lot of investor capital interested in it, and we've seen a lot of user user demand in the market as well, looking to buy product while they can. And then lastly, office. So office, we've seen 23 transactions in the first quarter of 2025. Annualizing this out certainly shows us a year that could be, if there were 94 deals, I'd be kind of surprised to see that. I suppose it's possible, particularly given the fact that lenders are still trying to move office off of their balance sheets, not looking to add it. So there's a little bit of a debt issue in the market with office product, but there is value in the market here. And we are starting to see from leasing demand, especially in the suburbs, where we had most tenant activity was in that kind of 2 to 10,000 square foot range. We're now starting to see some requirements in that 20 to 30,000 square foot range circulating in the market. So definitely some signs of, I guess, improving demand, or very early stage demand is starting to improve in the office market. So could be very early signs of recovery for office, but not sure yet. Okay, office pricing. You can see here we've got a bounce in price. Really surprised to see this in the first quarter of 2025. And this just has to do with a bundle of deals that traded that are bringing that average up. I wonder if this will maintain for the rest of the year. I'm suspicious that it may not. But an interesting data point here to see that there is some activity in the office market that's positive, positive news. And then from a market cycle, Dr. Glenn Mueller for the fourth quarter 2025 has us at stage 1, which is coming out of recession into the first stage of recovery. So it is possible that some of the data we're seeing now is portending a very early stage recovery in the office market for the Boston area. So that is possible. That is possible that we're just starting to see the very beginning of this in the data. All right. Well, thanks for tuning in. If you are interested in talking more about the market specifically for your individual portfolio or your individual property, be happy to do that. We can set up a discovery call together, spend about 10-15 minutes chatting about your specific questions and what you'd like to understand about the market, your portfolio's position in the market, or maybe that one property that you're wondering, what's the right thing to do here with this property. We can talk you through how the market would respond to what you have, help you make that right real estate decision, whether it's holding onto that property, refinancing that, making additional acquisitions, or just doing nothing with it. So happy to do that. If you have any interest in chatting, you can contact us through our website at mansardcre.com. I'll put the link in the comment section below, and look forward to speaking with you. Take care.